Hello, everybody. Welcome to Inventory Part 1. This is going to be an overview of what we're going to be discovering in inventory. Okay, so what we're going to be focusing on is inventory for retailers and when we're purchasing inventory to resell. If we want to learn about manufacturers, that's going to be in cost accounting or managerial accounting. Very exciting, the sequel to this class. But over here, we've got when we purchase inventory, what we're going to be exploring is when does the title pass? And when we're talking about title passing, we're going to be looking at a term called free on board. We're going to look at that either being shipping or destination. We're also going to look at terms. So we're going to learn about if the customer pays within a certain number of days, we're going to be giving them a discount. We're going to learn how those work. We're going to be learning how to account for purchase returns, allowances, and discounts. Also, too, when it comes to inventory sales, when it comes to selling inventory, we have to remember, and this is why we haven't covered this in the previous chapters. If you look at the previous presentations, I never sold inventory. And the reason is that there's two things that are happening. We are recording revenue, and simultaneously that inventory is walking out of our store legally. So we're giving the customer the inventory that they're leaving with. So there's two things happening. So we're going to do the accounting for it a little bit different. We're also going to learn how to account for sales returns, sales allowances, and sales discounts. These are handled a little bit differently than purchase returns, purchase allowances, and purchase discounts, but it's kind of the same theory. Okay, and then we're going to get into some really fun stuff, which is going to be inventory costing. What exactly is that? Well, we're going to determine the amount, the dollar amount to record the cost of goods sold. So when we're going through and doing inventory costing, we're going to look at periodic methods, which has an assumption that all sales happen at the very end of the month or at the very end of the accounting period. We're also going to be looking at perpetual methods, meaning we record as we go. And we're also going to be looking within those periodic and perpetual, we're going to learn about FIFO. What is FIFO? That means first in, first out, or last in, still here. And LIFO, last in, first out, or FISH, first in, still here in terms of the inventory. But let's not confuse ourselves. Over here, we're also going to be learning about weighted average. Weighted average perpetual is going to be a lot of fun, can tell you that much. And then what about specific identification? Well, we're not going to be covering that, but I'll mention it when we get to that point. Also, in terms of inventory valuation, if I bought a bunch of iPhone 3s for $700 and they're sitting in my inventory, what are those worth today? I don't think very much. We're going to learn how we have to record inventory at the lower of cost or market. And then how do we go through and record that adjustment of the inventory? So I want to thank you for joining me here today. Please feel free to leave any kind of questions you have below. Appreciate your liking and subscribing. And if you're brand new to the channel, if there's anything I can do in terms of assisting you, if you have questions, I would love to have you come on and we can do an interview and go through whatever you want to talk about, accounting-wise, career-wise. So in any event, though, thank you once again for liking and subscribing, and I'll see you on the next video. Have a great day.